Bonjour et bienvenue les amis. Hello my friends. If I can get everybody to grab a seat, we will get started momentarily. All right, so I'm just going to jump in and get started. My name is Amber. I'm the founder, CEO, and chief AML ninja at Outlier, and we're basically compliance nerds, so we try to keep people out of trouble. We've been working in the crypto space for a while now, and being a compliance nerd, I always have to start with a couple of hefty disclaimers. I am not a lawyer, and nothing that I say should be considered legal advice. On our panel, we do have a lawyer, and she is lovely, but she is not your lawyer, and nothing that she says in this context should be considered legal advice, even if Anna actually is your lawyer. We don't represent any government or government body, so we're going to be talking about laws and regulations, but please don't misinterpret anything that I say as being an actual position of a government or law enforcement. This presentation is about virtual currencies. So if you are dealing in things that are securities, there are laws that relate to those that are similar but different. And I think that's important to point out at the outset. And finally, information should be free. So we'll be posting a copy of this presentation. And if there's anything that you want in that regard, please don't hesitate to ask. Today, we're going to be talking about money laundering and terrorist financing. So really simply at its core, money laundering is just the process of taking dirty money, so money that was obtained from crimes, moving it through the financial system and trying to make it look legitimate. Where terrorist financing is either financing through any act or omission a terrorist act. There is a whole bunch of acronyms in terms of what we'll be talking about. If you're not familiar with them, so if I'm going through something and I'm talking about something and you're like, hey, what does that mean again? Just throw up a hand and ask. And throughout the presentation, throughout the panel, if you need our attention, please don't hesitate to put a hand in the air. So we recently had some regulatory amendments in Canada. And in terms of what's in scope, I wanted to point out that we're talking about persons or entities that are engaged in the business of dealing in virtual currencies. So really, if you're doing something for business purposes, and I know that a lot of people got really freaked out, in particular on Twitter, there was a lot of conversations about like, oh, if I'm a person who's just sending Bitcoin to pay for a service, am I captured? No, that's not the intent. The intent isn't to capture true peer-to-peer transactions. The intent is to capture business activities. This regulation was released recently, so in July 2010. So there are a couple of important dates. One of those is about a year out. So on June 1st, the initial pieces of that will come into play. And those will make people or entities that are dealing in virtual currency money services businesses. There's a whole slew of other changes that will come into play on June 1st, 2021. And the intent of that was really that they wanted to have the dealing in virtual currency piece in place as soon as possible. Unfortunately, this means that you're going to be implementing a compliance program if you're a dealer in virtual currency, waiting a year and then making a bunch of changes to that you won't be able to do initially. Congratulations, I'm sorry. We had some new definitions that were introduced, and one of the things that I thought was really fun is that we actually have a definition that's in our legislation now that talks about fiat currency. And we talk about fiat currency as being issued by a government or a central bank, and that being different from virtual currency. That's going to be really important when you look at a lot of things. And one of the big questions that seems to come up is, what about stable tokens? What about these other tokens? And the answer to that is that I think if they're not issued by a country, if it's not designated as a legal tender in that country, then it's going to fall under the auspices of virtual currency and not under the auspices of fiat currency. I went the wrong way. In terms of virtual currency exchange transactions, we're talking about two different activities that are captured here. And one of those is exchanging one virtual currency for another. The other one of those is exchanging virtual currency for fiat. For anyone who has been following what the Financial Action Task Force was doing, you would say to yourself, well, wasn't there some guidance way back in, around 2014, 2015, where they said that we should all be focused on on-off ramps, so the point where you go to and from fiat. And I think it's really important historically to look at the different things that have happened since then. So at the point that that initial guidance was written that just talked about on-off ramps, we didn't have stable coins, and so there was no billions of dollars in Tether in circulation. We also didn't have ICOs that raised millions of dollars by collecting, Bitcoin and Ethereum. So you didn't have these really robust exchanges that you tend to have now that are just virtual currency to virtual currency transactions. And I think that's really important in terms of the context and why that's changed. Some of the interesting points, what they intend to capture is going to include custodial wallets. So if you're holding your customers' private keys, there is a good chance that you will be captured. If you are exchanging, if you're a brokerage, if you are an ATM operator, then there's a good chance that you're captured here. The other really important change is that this is going to apply to both foreign and domestic MSBs. So, and I think I actually have the date wrong here in terms of when it applies. It should be 2021 rather than 2020. But other than that, we're good. So foreign MSBs that are outside of Canada, that don't have a significant nexus to Canada, if they are targeting Canadian customers, are going to fall under this legislation. And I think that's probably a good thing in certain ways in terms of leveling the playing field. I think customers that are based here in Canada will tend to be very appreciative of that. And what that looks like in terms of how will they know if you're targeting Canadian customers, we don't know the answers to that yet. I think we're going to be waiting on some policy interpretations from our regulator. In terms of being an MSB, if you're a money service business, there's some stuff that you're going to have to do. The first of those is to register with FINTRAC. And so right now you can pre-register. You can't complete the whole registration process. You need to have a compliance officer, and that's just a person that's responsible for compliance. In my opinion, some of the best compliance officers tend to be from environments where they've already done compliance for a long time. I know some fantastic people who are former bankers and current crypto compliance officers and really darn good at it. So I do think that it's important to bring in someone that has a good background in compliance. You'll need to have policies and procedures. So a policy just says, here's what we have to do. A procedure says, here's how we do it. At its best, these are a document that someone from outside of your business can pick up and follow. So it's not enough to have just a generic policy that someone designed that has nothing to do with your business, that isn't customized to you. It has to reflect what you're really doing. You need to document a risk assessment. So that's a thing that talks about the risk that your business could be used to launder money or finance terrorism. There's very specific categories, and fortunately also some pretty good guidance online about that. You have to train your staff. So any staff that's dealing with customers, any staff that's dealing with transactions, including your back office staff, you really want them to be able to understand what this is and to recognize when a transaction might be suspicious or unusual and tell your compliance officer about it. And you have to have these AML compliance effectiveness reviews or audits. So it's an audit for compliance. You have to do it every 2 years. It's exactly as much fun as it sounds, but it is far better that someone finds out that you have a problem with your compliance program in the context of an audit than to have your regulator find out and tell you about it and to risk a penalty. So the FINTRAC registration process is a pretty straightforward, simple process. It's an online process. You fill out a form. You give them information about your business. And pretty please, if anyone tells you that there's a fee for that, just go report that person to the Anti-Fraud Center. We've already seen spam and phishing emails that talk about fees to register for FINTRAC. There is no fee to go through this process. The other bit about it, once you're through the process and you're registered as an MSB, it means exactly that. You're registered as an MSB. It doesn't mean that the regulator has approved your business. So also pretty please, don't put FINTRAC approved on your website. They don't tend to like that. And when they do examinations, they do look at companies' websites. Absolutely. Sorry, do you want to?
registration number on and a link to the registration in FinTrack once you're registered.
Absolutely. Having the information there isn't problematic. It's just the idea of saying regulator approved.
Yeah, don't say approved.
Yeah, it's not an endorsement in any way that you have a good compliance program.
Yeah, I think for a lot of folks, when you start to go through the registration program or the registration process to become an MSB, you'll be surprised at how simple and straightforward and streamlined that process is. So once these regulations come into force, you'll need to start identifying customers, and you'll need to identify anyone that is doing a transaction that's valued at $1,000 or more. So they're sending you crypto, they're doing a trade, then you would have an identification requirement. The interesting bit that comes into play here is that your bank may want you to identify at a different threshold. So if you're looking at it and saying, hey, what if we just set a $900 threshold on all our trades and then we never have to identify anyone? It's valid from a regulatory perspective, but you'll probably have a very hard time in getting a bank account, which unfortunately is true oftentimes in the space anyway. There are very specific identification methods that you'll have to use. And so in terms of how you identify your customers if they're doing this type of transaction, if you've just had them send you a copy of your license with a selfie of them holding it up, that's probably not going to be enough to pass muster. So you'll need to pay attention to what the actual acceptable identification methods are. And sometimes that's going to mean that you need to go back and re-identify your customer base. If you're using an identification solution, it's really important to make sure that they are actually compliant with Canadian requirements. So that's the thing that we spend a lot of time on with our clients is actually to sit there and go through with them what their service providers are telling them they're doing and looking at it to see whether or not it's compliant. There are some amazing solutions out there, and there are a lot of solutions that just don't work at all in the Canadian context. So make sure you know the difference. There's some good news, though. There was some wording in there that they changed immediately, and it's the only thing that they had in this regulatory package that took effect immediately, where they had talked about at one point that a document that you provided had to be original. And by original, it means that, let's say as part of my identification process, I was proving my address by showing a Rogers bill. If Rogers sent me that bill on paper, and I was sending it to Charlene at CoinSquare, then I was supposed to send her that original paper document. And it couldn't be a scan, it couldn't be a fax, it couldn't be a photocopy. And so that they've actually changed to say authentic. Now, authentic means that you have to do something to determine that, yes, this is a Rogers bill, and yes, it does belong to Amber Scott, and that you're satisfied with that, but then you can use that. So it doesn't matter that it's that original paper or it's a scanned version of it. In terms of collecting KYC information, there are very prescriptive things that you have to collect when customers are doing transactions over a particular threshold, and these are not optional. So whenever there's KYC that you're being asked for, there are things that are mandatory. There's no light version of it. And FinTrack tends to look fairly seriously on this when they examine people if they're missing information or they don't have the right information as part of their customer profiles. Some types of transactions are going to have to be reported. So suspicious transactions, if you think there are reasonable grounds to believe that something is related to money laundering or terrorist financing. And reasonable grounds, by the way, does not mean that I know. It's not beyond a reasonable doubt. It's just a reasonable person would look at it and say, yeah, that seems to be shady. Then that needs to be reported to FinTrack. Large cash transactions, so if you're receiving $10,000 or more from any person or entity in the same 24-hour period. Electronic fund transfer reports, so this is if you're doing wires or other types of electronic fund transfers on behalf of your customers. And I want to pause here for a second and just say, if you're doing EFTs for their own sake on behalf of your customers, you are probably already an MSB. So if you're doing EFTs that aren't part of a buy-sell transaction, it's just you're sending wires on your customer's behalf, you're probably already a money service business, and that's worth giving some thought to. And there's a piece that isn't going to come into force until 2021, which is the large virtual currency transaction reports. So after that time, any transaction that you do, much like the large cash, if you receive $10,000 or more in virtual currency, then you would report that to FinTrack. There's one final type of report, which is a terrorist property report. These are incredibly rare, but they do occur. And if this happens, there's probably also a responsibility to freeze any property that you have on hand. And these go to FINTRAC, CSIS, and the RCMP. These reports, unlike any other ones which are all submitted online, actually have to be submitted via fax to specific fax numbers or paper. So theoretically, you could mail them as well. And they need to be sent as soon as possible. There are lists that are available online for free that are published by the Office of the Superintendent of Financial Institutions. And if this is something that you haven't looked at already, I would actually recommend starting to figure out how you're going to scan your client base and figure out if you have any of these folks that are in your current database of clients. Even if you don't think you're ever going to do any of these types of transactions, you still need processes in place to figure out whether or not any of these types of transactions have occurred. Your processes have to be documented, so everything that you do for compliance purposes, document. And you need to be able to show that a process ran, even if nothing reportable was detected. So when we're talking about that, when a regulator or an examiner or an auditor says to you, how do you know? How do you know that there were no cash transactions? What are you doing? How can you prove that nothing over $10,000 occurred? You need to be able to explain that. You need to be able to show that there was actually a null report or something that happened. So you can request, there is some ambiguity in the way that some of these things are worded, and I think it's important to mention here that you can request policy interpretations from FINTRAC. You just basically send them an email to a particular address, and you say, here's our question. A couple of important things to know about that. One of those things is that those policy interpretations can be published on FINTRAC's website. So if you have a question that has to do with your strategic information or something that you think about as really being secret sauce for your business, then you'll really want to let them know as part of your question. Please don't publish this piece of information on your website. The other part of that is that those pieces do follow you. And so if you are a money service business or other kind of regulated entity, that becomes part of your file with FINTRAC. So they know what questions you've asked. They keep records of that. And if a lot of those questions aren't particularly astute, then you will probably have an examination sooner rather than later. So be judicious in what you ask in terms of those questions. If you're concerned about that, you can actually ask questions through a third party, so your friendly neighborhood lawyers and consultants can help you with that as well. Yes. Microphone.
Oh, sorry, I keep forgetting about that. Just because you send an email, it's probably a good idea to give them a call to say that you sent an email, because sometimes things get lost. I know I've done 3 this year, 2 of them got lost. I had to call them like 3 weeks later, like, where did it go? Oh, we didn't know that. Anyway.
Yeah, I set reminders in my calendar just to annoy them. Whenever I send them a request, I annoy them every 2 weeks. It usually takes, right now it's taking us about between 4 and 8 weeks to get an answer on average, but we do get them. The other piece that's important, compliance is never perfect, and so if there is an oops moment where you have one of these obligations, you haven't met it, you realize it, there is a way to let FINTRAC know about that by doing a voluntary disclosure. And there's a specific format that you write to them in to say, hey, we had a problem, we've fixed it. But there's some really important things about that. And the idea there is that you understand the scope of the problem, so you've really got your arms around it. I'm not saying, hey, I missed 20 large cash reports, and then next week I missed 20 more, and then the week after I missed 20 more. I can't keep doing those reports. After a while, I stop being protected. So the idea is that you really understand the scope of the problem and that you fixed it. But if those things are true and you go through that process, even if they examine you, then they still wouldn't hold that against you in terms of having a penalty about those things. So I think that's relatively important. FINTRAC does have the right to examine you. So once you're a money service business, they can send you a letter. So they usually phone first and say, hey, we'd like to examine you. Then you'll get a formal letter. They'll ask you to submit some documents and data, and then you'll go through that audit process with them. Where there is significant noncompliance, there is actually the possibility of a penalty based on FINTRAC examinations. And in terms of just, I know there's going to be some folks here that are very, very new to the idea of compliance. And I just wanted to throw out there, you know, get out, talk to other compliance geeks. We have some great industry associations. So we have the Canadian Money Service Business Association, of which Joseph is actually the executive director, in addition to some pretty cool compliance stuff that he does. And we have the Digital Chamber of Commerce of Canada that's doing some fantastic work. If you're looking at regulations and you're thinking, ooh, you know, they really got it wrong, there are consultation processes. They go on relatively frequently every time that we have regulatory change, so participate in them. Sign up for FinTrack's mailing list and look at their policy clarifications. So often people have already asked the same question that you have.
Is it old school? FinTrack also has an RSS feed instead of a mailing list.
Awesome. So this is me. Feel free to reach out if you have any questions. I've also got links to all of the source materials. So when we send out the presentation, anything that I've talked about where you wonder, where do I find these things? And I'll be updating this to add some really great articles from some of my panelists as well as any other resources that they'd like to add. And from there, we're going to, actually, let's just jump into our panel because I think the questions we're going to be talking about are really related to that. Thank you. Oh, yeah, it's not really putting in your chair.
Comfortable.
Appreciate.
Fireside chat.
Does this work? Yeah. Sound good. Thanks for everyone for coming. My name is Stephen Brent Sargent. I'm an AML investigator, and I do a little bit of law enforcement liaison at BitFinex. We have some of our crew members here. If you have any questions for BitFinex or maybe even Tether, we might be able to answer it. I'm going to let each panelist actually go into their own bio, because I spent most of my time designing these cool cue cards on Vistaprint and picking out my outfit. So we're going to start with it. We're going to start with Amber. Just tell us a little bit about yourself, maybe how you transitioned from traditional banking into crypto compliance.
Sure. Transitioning into crypto compliance for me was a completely happy accident. So I was doing consulting, and a friend of mine asked me to update his risk assessment. I knew absolutely nothing about Bitcoin, but we talked about it, and I was like, yeah, I read about it in Wired, don't really know a lot about it. Can you pay a retainer for me in Bitcoin? And then just fell down the rabbit hole. Haven't left, still learning lots.
And how about you? You work for a major law firm. Can you tell us about your passion for technology and Bitcoin within the law firm?
Sure. So I'm Anna Badour. I'm a partner at McCarthy Tetrault, the financial services group and co-leader of fintech practice. So for me, probably my first introduction was after practicing law for about 10 years, I went back to school in 2013 and did my master's in banking regulation. And one of my profs at the time worked for Circle. And it was still pretty early days, and he was essentially flying all around the world and testifying about what Bitcoin was. And he basically indoctrinated the whole class, and I think ever since then, he kind of created little monsters that are trying to help as much as we can.
Did you ever send him a thank you note?
I still see him sometimes, yeah. He's still very active, yeah.
And Charlene, I hear you're a semi-professional baton twirler, but can you tell us a little bit about your crypto compliance
Thanks for
experience?
bringing that up. Yeah, I mean, I kind of forgot about this up until not that long ago, but I have sorry, my name's Charlene Cieslik. I'm the Chief Anti-Money Laundering Officer and Chief Privacy Officer and a few other things at CoinSquare. Been there about a year and a half now, but, you know, going back to about, 7 or 8 years ago, I was working at RBC in the AML group as a manager, and they were like, what's this Second Life thing? And what's with the, e-gold thing? Like, do some research on that. So, like, that came, I was like, oh, yeah, I did that. Then I, after I got out of consulting, too, I did a little bit of work for, like, a coin company out of Vancouver. And I said, pay me in Bitcoin. And they said, no. And I was like, why would I believe in you if you don't even believe in your own thing? And damn it, I wish they did pay me in that. But I went back into consulting and back into banking after that. I've sort of flopped back and forth. You'll see it on my LinkedIn. And by virtue of having a very terrible job in banking that I hated, and then that somebody called me up from CoinSquare, and at first I would have been like, not a chance. What is this? And then after having that really terrible job, I was like, tell me more about this role, and I'll tell you how I can help you. And so it's been a love story ever since.
Hold on, you mean there's terrible jobs in banking?
There's terrible jobs everywhere, but I just had this one.
Spoiler
that-
alert, guys.
you know what, sometimes it takes a bad experience to point you to something you wouldn't normally have considered. So there's the story of me.
Joseph, you're an executive director at the CMSBA, and you're also doing some amazing work in putting Hamilton on the map in regards to technology and blockchain. Can you tell us a little bit about that and your background?
Okay, thank you, Stephen. So my name is Joseph Iuso. Basically head of business development, co-founder at KYC 2020. We do compliance screening there. I do some consulting work in payment service company and a crypto exchange for being their CAMLO and CCO and privacy officer. For some strange reason, they need that kind of stuff. It's all bundled together when it comes to risk. I got into crypto 2012 with Charlie Shrem at BitInstant. He got into some trouble. I had to bail myself out of some of that trouble. Turned off crypto till 2017, jumped back in. Really, it's been a fun ride since, learning about all the different tokens, blockchain and technologies and how they work and stuff like that. So it's been a pretty wild ride.
How's a small town like Hamilton embracing this technology?
Sorry, I didn't talk about Hamilton. Hamilton is slow and steady. I mean, at the end of the day, we're trying to educate everybody in the Hamilton area. We've got this void in between of Waterloo and Kitchener and Toronto, and Hamilton seems to have got stuck in a little bit of the past. So we're trying to promote it. We're trying to get people to understand it. The crowds are getting bigger in some cases. In other cases, they're getting stagnant. I think it's there was a big crew late 2017 to 2018 because of all the ICOs. Everybody was all excited, and now you're just seeing the standard crew of people coming to the regular events and things like that. We have a workshop we just did about a month ago. We had about 80 people, 70 people, 80 people. And then even though we had 120 registered, and we've got another one coming up in September where we're also bundling in AI and blockchain because there seems to be some correlation there. And just seeing how we can help Hamilton learn to use the technology to their advantage if it's applicable. Like, I mean, nobody wants to, you don't want to throw blockchain down people's throat or crypto down people's throat. It's not about that. It's about, can you find efficiencies? Can you find out, is there a way to use this technology in an efficient manner that makes sense, right? At the end of the day, there's a lot of stuff that doesn't make sense.
That's amazing. We'll start off some of the questioning. Charlene, I want to start with you, actually. You know, CoinSquare, never lost a coin is your slogan. You guys seem to be ahead of the game when it came to putting in regulation, or adhering to regulations that weren't actually born yet, but doing your crypto compliance AML program. Can you tell me, was there any changes or in the final draft, anything that you saw where that may have surprised you at all that was going to be included in the final draft?
Well, no, there was no surprises because I participated throughout the summer, like for a year of consultations with the federal government. But when, like, I joined CoinSquare about a year and a half ago, and like Amber introduced this in her beginning is opening statements, is that if you are accepting wire transfers, even if it's through a bank on behalf of your customers, you are already a money service business. So irrespective of the crypto trading that we were doing, you know, the taking of wires and the sending out of wires to people, that's the very definition of the original three-pronged definition of an MSB. Funny enough, we had to very much fight our way to get registered with FinTrack. They were like, no, you're not a MSB. And like, well, we are. We take wires, which is the very definition. So that happened before I joined CoinSquare, that we were registered in 2017. So the reason that they hired me and the reason that they found me is that they were preparing for this, knowing it was coming, because so much was already there as an MSB that was needed. So I came in, Melanie will remember my joining of CoinSquare, and I built an AML program in 22 days straight of not leaving the office. And I had not really, like, you know, doing it on crypto, because I'm like, it's not just the wire stuff that we had to worry about. With the KYC and the risk assessment policies and procedures, we needed to get that all in place, A, to be compliant originally with regular MSB legislation, B, our banks, and soon-to-be banks at that time, were demanding it, and I knew how to do it because I did it before in the first round of big bad MSBs that all got demarketed back in the day that we worked together, and you know, all the banks saying like, we have to get rid of you, we're de-risking, so rebuilding compliance programs for them. It really wasn't that much different, but for the crypto angle. And then I was just like, how do we monitor this? How do we look at suspicion in this? There's not the 100 years of bad banking cases to look at to build red flags on. So it, you know, it was, and it still remains to this day, a continual learning process for doing that. So back to your original point of the surprise, or was there one? I mean, I wasn't surprised because I was there. I am a little bit surprised, but not really, that they didn't really listen to the industry so much in the industry consultation. And I don't know, I think we'll get into later the specifics on crypto travel rules and crypto reporting. But there was enough of us participating there, enough crypto-based companies showing up and giving back comments about why that wouldn't work or what the outcome of that would be, that because of the FATF rulings, it's just like, well, you're going to have to do it anyway, and now we're going to give you a little bit of time to do it. And it's like, well, they didn't even think of the consequences, despite the fact of us laying it out, of like, you might regulate a virtual asset service provider, they're calling us VASPs under the FATF. But all that's going to do is force people to go back to using peer-to-peer and personal wallets, and you don't have to do KYC on a peer-to-peer wallet.
Before we get into the travel rule, dig down deep, Amber, was there anything that you were lobbying for as part of the consultations that you were maybe not shocked, but were really hoping that they would change their mind on?
I think that they actually came to a fairly good place in terms of the definitions. I think that the way that they've described and incorporated the word private key into the definitions, for instance, for cryptocurrency or for a virtual currency is really good. The original way that it was published talked about information that could be used to access, and that just seems so broad, just bizarrely overly broad. And then there is a lot of nuance that I hope they come out with in policy positions. So I think that there are a lot of open questions right now, and some of those are going to come down to how FINTRAC interprets them. I hope that those interpretations are in line with what we heard in the industry consultations in terms of the spirit of the regulation and the policy intent.
And from a lawyer aspect, and I know Evan's in the crowd as well, when the regulations don't really define dealing in virtual currencies, where do you see there are going to be issues from a legal standpoint or just an industry standpoint without that definition being in there?
So we don't have the guidance yet, and I think, you know, we're having a discussion on kind of half the piece because we don't have the background as to what FINTRAC thinks at this point. Obviously, they've made comments in consultations, et cetera, but it's not available on paper. I think it is a little disconcerting that it's still not defined. I think that's really, you know, even before the regs came out, when that term was added to the act, everyone was like, well, what's dealing in virtual currency mean? And I think we still don't really have a solid answer on that. So I think that may, to some extent, that may be deliberate because it creates kind of an openness and a term that can evolve over time, and that doesn't narrowly define something that is obviously changing as we speak. So I think they've kind of left the door open so that they can narrow it both in terms of the guidance that they issue and policy interpretation going forward, because they know it's going to change, and anything that they put in now, you know, in 2021, what will that look like, or even 2020?
Joseph, I've heard a couple times, even a little bit here today, is that some companies that are involved in blockchain and cryptocurrency are saying, well, we got a year, we can do what we want within the year as long as we have that structure in place when the act and the enforcements come into place. What's your advice to those people? Even, you know, you're a CAML for a cryptocurrency company. What would be your advice or concerns with that attitude?
First, good question. First and foremost, if you haven't started, you're already too late. It takes a long time to get these guys to understand all the different components they need to put in place, from ascertaining identity to looking at all the indicators and seeing how they apply, to getting your own indicators, to putting in your reporting. It just goes on and on and on. Like, I mean, it takes a good 6 to 9 months to put in the technology components and the reporting components, never mind all the policies and procedures that basically rely on that. So if you haven't got started, you better start hurrying up. I mean, I know Charlene said in 22 days, but they already had something in place. If you haven't started, you got to get started. There's a lot of things to do.
Yeah, I mean, they had a base before, but this is why I'll go back again to Amber's point in the opening statements. A qualified chief anti-money laundering officer. You can't just pick a dev engineer in your back office and be like, you're the one who's accountable. That person won't have the faintest clue of how to implement. Like, anyone can read the website. Anyone can copy the FinTrack guidance. I've seen some great cut and paste jobs sold by consultants with all the requirements in an 89-page document with 48 appendices, and it looks like you're compliant, but to operationalize it, I make this statement at probably everything I speak at, is that someone who can move it from paper to daily to reporting, like, you need someone who's able to move that through and get all the parts playing together. And if you don't have someone, I'm not saying you need to hire me with 20 years experience, but you need to have someone who, say, did more than 8 years of sanction screening at Scotiabank. No offense to Scotiabank if you're in the office.
Agreed. That's where the difficulty comes in, is understanding how all those pieces fit together and putting it into the daily operation of the company, right? So you need to be checking your 24-hour rules to make sure all your 3,000s or more. You need to make sure that all your 10,000 or more are being reported. You need to be looking for suspicious activity. You need to be verifying, ascertaining of identities, because that's another thing. Like, you get the operations people to look at it, and they say, yeah, that looks good, and then the compliance people come in and say, oh, that doesn't look so good. No, ask for more documents, freeze that funds until you, like, there's a lot of things that need to be done in the daily operations, but you need to get to that point.
Amber, do you think that FinTrack will look at companies within that year frame to see who's been doing a better job of building a compliance program versus everyone taking it for a free-for-all during that time?
Like, do I think that FinTrack will look at people before
We'll look at that, and then when the
June?
regulations come in, kind of look to ding those people. And I'm not quite sure with how they do business. And
Who have they dinged lately?
Well, it's so that's an interesting one, because that's coming. There have been notices of assessment filed since January. So FinTrack issued some new guidance in terms of here's how we do examinations. There was a moratorium on penalties from 2016 until this year. And we do know from some data requests that there have been penalties assessed already. I'm trying to get a better handle on what that looks like statistically, so we'll see. Hopefully we'll be talking about that at some point in the near term. But between now and June 1st, 2020, they're not going to examine people that are dealers in virtual currency that aren't any other type of regulated entity. If you're not an MSB yet, FinTrack can't come in and examine you. But if you are, posting a lot of screw the man, we're never going to do this, we're going to keep being a company, we're going to keep serving Canadians, we're not going to bother complying, rest assured that they do follow those things. They do look at companies' websites. And part of the way that they decide who they're going to examine is that they look at the risk associated with a company. And so if they think that a company is particularly high risk, and that could be one of the reasons. The reasons could be that there's a lot of volume. So if you have a lot of market share, if you're posting like, forget about sanctions, we're going to do all of the transactions with North Korea that we want, then probably you're going to have an exam sooner than later after that date.
I would also add, and it's been alluded to, you may already be an MSB, not just by virtue of the fact that you're engaging in funds transfer, but also foreign exchange. And then there are other categories as well that you may be captured under, most notably securities dealer. And don't expect that if you're having some inquiries on the securities side that those regulators aren't speaking to FinTrack as well. And then another one that we see sometimes is dealer in precious metals, particularly kind of gold-backed stable coins. They may be triggering requirements there. So it's not just the MSB. There are a number of categories that you could already be caught under. And you're caught in Quebec as well if you're dealing there. Those changes were passed in 2015.
Just, one of the things I like to point out about the new regs is, I do a lot of speaking, and we're always talking about the new virtual currency rules and MSBs, but they've also added next to every other entity type or dealing in virtual currency. So meaning if you're a bank, an insurance company, credit union, casino, so like those entities, although regulated maybe separately from being an MSB, don't also have to become an MSB because they're already captured under that rule. I don't know if there's anyone in here that would fall into that definition, but it'll be interesting to see how this plays out between FinTrack, all these entities, and the securities regulators who may be taking a different position than you're a money service business versus you're a securities dealer and you need a broker-dealer license or ATS license.
I have a question for the panel, just in regards to who's going to be a reporting entity and who's dealing in virtual currencies. How about the technology companies and the platform, the companies that are making technological platforms that people might say should be covered under these regulations? You guys have any thoughts about should the developers be worried?
I think if you're holding people's keys, then you really have to take a long, honest look at what you're doing. And if you are in a position where you're holding your users' private keys, you might not have an awful lot of wiggle room in terms of, is this what we're doing or not? You can't say that you're just deploying software if you are the key holder, and your customer is not the key holder. And that's probably the biggest consideration that I would say exists here.
Yeah, and then the next piece on adding on top of that is there's a new retail payments framework that if you're holding funds for more than 24 hours on behalf of somebody, and remember the funds definition has been updated, right? Then you may come under the new framework for retail payments as a domestic entity, even if you're just dealing in Canada. Right?
Now that the retail payments framework hasn't been fully issued,
No,
they,
no,
they
not
did
yet.
carve out virtual currency in the draft consultation paper, so it may be that most of the virtual currency businesses aren't captured, but certainly there's a lot more focus on entities holding funds and ensuring that those are well safeguarded, and that whole regime will have this whole requirement that from an operational perspective and a custodian of funds perspective that you have the appropriate safeguards in place.
Yeah, I think this is where we're going to get into FinTrack interpretations and spirit of the legislation, because you have to think about why is anybody issuing these laws in the first place? What is Canada trying to get at by adding this to the regulations? And if you think about it in terms of FinTrack's mandate, safety and security of Canadians, soundness of the financial system, protection from terrorism, any way that allows you to move money undetected, cross-border, is something that they're going to be interested in. So, you know, there's been a lot of debate during the consultation process about what if it's just an in-game token and I can't use it? Well, on the face of it, probably not, but then it depends on how that in-game token can be used, traded on a secondary market. Does it have value outside? Are people playing with this outside of the, you know, this is all going to have to go to interpretation because of that definition of dealing in not being set. And they don't have, you know, it's like trying to say, like, let's think of every possible permutation. They can't do that in law, so they're going to have to do that in interpretation.
And Charlene was just talking about like the spirit of the legislation. From a legal standpoint, is there any changes that you see could be heavily disputed in the courts, or that you're looking at and you're like, okay, this is going to keep me very busy from a legal aspect?
So I think from a court perspective, we have to kind of understand the context, which is that there really isn't that much litigation on the Proceeds of Crime, Money Laundering, Terrorist Financing Act, and most of it has been to date really around the penalties and the ability to administer the penalties. That's because you essentially have a regulator, FinTrack, and they have a fair bit of deference and expertise, and so really most of the time you're fighting with your regulator. You're not necessarily going all the way up to the courts. You can. There is an appeal process where you go through federal court, but that's lengthy and expensive, and you're fighting with your regulator, which you have to think about what that means to you. So I think where you'll see more of the pure litigation will be on the border cases that you know, whether or not someone is dealing in virtual currency, because if they're not subject to FinTrack jurisdiction. So they're fighting the jurisdiction as a whole, which, you know, once you are under that jurisdiction, as we've heard, there's a lot more compliance obligations. So financially it makes sense to fight it. We also see things where there might be litigation that's more coming from other areas. So, for example, on de-risking and competition and what that means. So it may be that we do see litigation coming around, but not necessarily as a result of the regs, more as a result of both the fact that you still have that tension in terms of access to banking services, and as well with the new administrative monetary penalties policy, that's probably going to result in another court challenge at some point. And one of the interesting things there as well is that there's more clarity now on essentially the ability of FINTRAC to name entities that are subject to the fine. And that obviously has much more of an impact, and so you have more of an impetus to fight it. And as well, when you get named on these types of things, it tends to spur a bunch of class actions on other aspects. So for example, for a public company, the shareholders may sue if they see there's a penalty that's been awarded. So there might be a bunch of litigation that spins off, but not necessarily from the regs themselves.
I hate to bring up de-risking. I've heard it a couple times, and I know there's a lot of people on this panel that I can see Amber's blood boiling already. But and anyone can answer this, do these regulations help with the aspect of getting and maintaining a bank account in Canada, in your opinion?
I think it's hard to know until they're actually enforced. I'm cynical because money service businesses today, so businesses that are doing remittance or foreign exchange, have a really hard time with banking to begin with. It is probably the biggest barrier to entry to money service business in Canada. It's not compliance, it's not regulation, it's not financial, it's really getting and maintaining a banking relationship. These regulations certainly don't compel banks to open accounts, but I think there are some things in there that are positive, and part of that is that there is a standard that companies will be expected to meet. The other interesting thing that happens with foreign money service businesses is that there's a piece that comes into play in 2021 where banks are actually prohibited from serving money service businesses that are not registered with FINTRAC. So I think that's starting to communicate, hopefully a little. There is an expectation that if people are, and businesses are meeting the standard that they need to meet, that they will be banked. But it remains to be seen.
Charlene, from someone that actually has a banking relationship with the big five banks, what do you see from maybe we talked a lot about foreign MSBs, domestic MSBs, what are you seeing in the way of other MSBs that are doing the exact same services that you're doing that aren't registered as MSBs now? How do these regulations affect them? And are you happy that these regulations are finally in place so everyone's playing at the same equal field?
Oh, that's a bit of a loaded question. I mean, I think certainly it coming under the law takes away a financial institution's excuse to say, well, you're an unregulated business, so you're too risky and you exceed our risk tolerance. Like, no, we are actually regulated. It might not be a strong regulator. The MSB part of FINTRAC, like with every other entity, casinos have the lottery corporations, the banks have OSFI, insurance has their own, it's at Credit Union Central, et cetera. So like it was always perceived that these other entities had stronger regulators and MSBs had only FINTRAC, therefore a weaker regulator. And of course, getting our own bank account was a big feat, and it took a long time to woo the bank to trust that even though we did all the hiring and put in all the processes and the policies and procedures weren't just words on a page, and after site visit, voting of the entire senior executive, whether they should accept our risk or not. I hope we've led the way a little bit for them to say, hey, not all cryptos are dirty players in the field. But I am resentful, and I'm sure anybody in here who knows me knows how resentful I am about the idea that we've invested the time and effort, we've put in the resources, we bought the software, we pay my salary, yay. And and if somebody else rolls in with this, no program, no compliance, and they just get a bank account, that's going to piss me off. Because I don't think everybody needs to do what CoinSquare does. But what I'm hopeful for is that it does set the standard and the expectation, and that what I'm fearful of is that FINTRAC can literally walk down the street, well, at least from their old office, to my office at any time and knock on the door and check. I'm okay with that. I've passed many FINTRAC exams in my life. I have no fear of FINTRAC. But I don't like the unfairness in the industry, and particularly of a foreign, and I don't have the answer to what to do about it yet, but a foreign operator that's operating in Canada. FINTRAC is responsible to monitor about 33,000 entities in Canada. Now they've just added the world. whatever world is going to set foot in Canada in whatever footprint way that they've described in the regulations, how much effort are they putting into monitoring, overseeing, auditing people who are serving Canadians? You know, they've signed up and got their registration, which, as we all know, is not that hard to get, but they've never been audited, and FINTRAC never spends any time on them.
Joseph actually was going to segue into this question for you as the executive director of the CMSBA. One of the events, we heard a lot of disgruntled MSBs talking about MSBs set up beside them that aren't registered, aren't following the rules, and FINTRAC really doesn't have the capacity to knock on their door. It's similar to the Law Society. I was talking to someone earlier. The Law Society is really only going to go after lawyers. They're not going to go after people pretending to be lawyers. So does FINTRAC really have the resources to go after people that aren't going to register, are not going to follow the rules, and how will that affect the whole industry, not just from a cryptocurrency standpoint, but from the whole MSB industry?
That's a very good question. I've heard that question over and over for the years, and I've challenged FINTRAC on it, and I think some of us in the room have challenged FINTRAC on it, and their response is pretty clear. They're a entity that gathers the information and disseminates it. So a lot of that information they get from people reporting MSBs that aren't registered goes to FINTRAC. FINTRAC provides it to the RCMP or the local authorities, and then they have to do an investigation. Like any investigation, they have to build a case, they have to put the information together, and then they have to get charged, right? So it's something that takes time. It does happen. We don't hear about it a lot, but they do investigate, they do report them, they do work with local and federal officials to do that kind of stuff. So it does happen. We just don't hear about it enough.
Sorry, are you referring to police investigations of money laundering or just basic registration of a business?
Businesses that are operating as an
Non-compliant.
MSB and not compliant, right? So they're operating as an MSB, they're not registered as an MSB. I know there's a few members on the previous board that used to report them, and they were frustrated. A year, 2 years into it, and these guys are still operating. And you go to FINTRAC, and they're like, yeah, we know about that area, we know about what they're doing. There's investigations going on. We're trying to track all the people down. Because a lot of it was, some of it was to do with Iranians, because there were sanctions there. Some of it was doing some of the other Middle Eastern countries. And they were bypassing the system, right?
Amber, from a cryptocurrency, maybe there's some companies in here that are just like, you know, we'll take our chances. They come to you, or like, Amber, what do you think? We'll take our chances. They don't even, people are saying FINTRAC doesn't know how to penalize properly. They don't even know how to explain their penalties. And we'll just call it a cost of business if we get dinged. What is your advice to them, and what are some of the consequences that they're not thinking about at this stage?
Yeah, so I mean, that's a fair question, and those people probably aren't coming to me, but I assume that if you're coming to me, it's because you want to understand compliance on some level, not because you've already decided that you're not doing it. But if that's something that you're looking at and you're seriously considering in your risk analysis, part of that becomes what happens to your business if you are penalized. And one of the things that Anna astutely mentioned was that it's much easier for FINTRAC to do the name and shame piece now. So if you are assessed with a penalty, and if you have no compliance officer and no policies and procedures and no training and you've never had a review, and you are an entity type that is regulated, that should have those things in place, and they come and knock on your door and you're like, we didn't do it. Or in a case that a FINTRAC examiner told us about recently, where they went and knocked on, they had called an MSB, they had sent them a letter saying that we're going to examine you. You don't seem to be registered with FINTRAC. You seem to be operating as an MSB. And FINTRAC's decision based on that was, well, you didn't respond, you didn't answer the door when we knocked. So we've decided that unless you prove otherwise, you don't have any of these things in place, and they assessed a penalty.
$500,000 minimum.
So I think that's a big deal. And even if you're saying we're raking in a lot of dollars, and so the price tag, it's that name and shame piece I still think can potentially have a lot of consequences for a business, including the loss of those banking relationships, the loss of payment service provider relationships, and anything that's really allowing you to have those fiat on-off ramps.
I would also add there's still as well the criminal code, which prohibits money laundering and was recently amended to essentially add the offense of reckless money laundering, which maybe call me a bit cynical, but to me seems to essentially target this kind of activity where you're just kind of looking at it and you're thinking, well, you know, I don't need to have a full AML compliance program in place. Let's not look at this too closely. So definitely, I think there's awareness that some parties have been a bit lax, and in part, you know, it's been in part because it's taken the regs so long to come into place. But I think there's an awareness of the risk, and just because you're not yet subject to it, or you know, even when you are, maybe the penalties don't seem that great. You don't feel the same way when the RCMP shows up and are charging you with reckless money laundering.
I think we've seen a little bit of this just with the legal marijuana industry. There had to be people at the early days taking the gamble of saying, like, listen, we know it's going to be regulated. We're building our business now, and there's been a bit of a forgiveness in that area, post license approval. And there's probably going to be a touch of that here in Canada too, but I think time will tell. I think it's also just worth mentioning for anyone in here, because crypto specifically, it doesn't have the border, right? So while we're talking about Canada and Canadian regulations, if you do business with anyone in the US, I just want to point out right now there are 5 people in prison, not for laundering money through their cryptocurrency company, but simply because they didn't have a license to do so. 5 people currently today are in prison for running an unlicensed money transmitter in the US. One of them isn't even in the US. He's from Mexico, and he was selling to Americans, taking money from Americans. So it has nothing to do even with, there's no proof he laundered money, but he didn't have a program, and he didn't have a license. So as at CoinSquare, when we're looking at B2B business offerings, and we get applicants saying, oh, I'm going to start this new Bit ATM, and I've got machines all over here and there. We're like, well, where's your license? Or do you have an exemption? Or is that state not taking? And they're like, oh, well, nobody's checked. And I'm like, get out, come back when you figure it out. Like, you got to figure out what your requirements are. I know what they are. I could tell you, but then you'd have to pay me. And maybe you should have thought about this before you invested all this time, money, and people. And then you end up being that guy in jail because you didn't get a license or even an exemption from having to get a license.
So, Joe, you do a fair bit of B2B as well. And do you have just like the business-to-business type of transactions? And you had mentioned, being a service provider for Charlie and that causing issues. And I'm curious, just looking back on all of the things that you've participated in this ecosystem, do you have any advice for people that are doing business-to-business type transactions, and what are the things that you look for?
I'm with Charlene. Basically, have your program ready. If you don't have your program, goodbye. Like, I don't even talk to you. Make sure you have, you've got all the stuff that you need.
Yeah. And don't hand me a one-pager
No.
that says we do not launder money. We promise.
Like for one of my other with one of my other companies that I'm a CCO for, a payment source, I've reviewed about 40 compliance AML packages, and I'm with Charlene. Some of them are like 3 pages, and I'm like, guys,
You didn't even try. You didn't even
can't,
try.
You can't put this together. Or another one's got one that's from the compliance people are from Cyprus, and you're like, what does that have to do with Canada? Oh, well, it should be the same. And I'm like, no, dude, go away, come back, fix that up. But there's other ones that do really good jobs. Like, I mean, just to name a few, like Paytm, Stack, like you look at their compliance program, solid, right? Like, I mean, they've got a solid program. What's behind it, that's another story, but at the end of the day, they've got some pretty good, whoever put them together has done a really good job. So that's what I look for. I look for those kind of things. Back in the day, I took on BitInstant because it wasn't a regulated entity at the time, right? All I could do was suggest. And at the time, Charlie was like, we don't need to do that. We don't. And then he gets caught. He goes to jail for 18 months. His cohort goes for 16 years. At the end of the day, do you want to go to jail? Really? Like, I mean,
I actually think Charlie gives the best compliance advice
Now
that
he
I've
does.
ever heard, which is like
Yeah.
his number one piece of advice is don't
Don't
ignore the
listen to
smoking
us,
gun.
listen to him, right?
Yeah.
Like, I mean, I was telling Charlie
Yes.
for 6 months, Charlie, you got to do this. You got to do that. Why should I do that? Oh, screw the guy. Like what Amber was saying. You can't be doing that, especially on blogs. And they're monitoring everything. They had every email, even my emails, showing me, okay, could you provide us more about, oh my gosh, right? Like, what are you going to do with that kind of stuff? So if you don't think they're watching you, think again.
Yeah, I think also if you read the kick, what's that legal document called? The statement of claim. It's very entertaining. I mean, I don't want to laugh at anybody else's misfortune, but you know, when you have an email that says we're just doing this to appease compliance, like those stickers that they were issuing, like it's a little bit funny in retrospect, but if you know, during the time, the arrogance of it all is just astounding to read at some times.
I never want to bring it up, but let's talk about Quadriga, because you're talking about kick. And just, you know, there's a lot of information, so much information that maybe not everyone knows exactly what's going on, and maybe you guys don't know exactly what's going on. And Joseph, you just probably got blacklisted from Charlie's podcast, so we'll start with Charlene. Charlene, where do you think the red flag should be for companies similar to Quadriga that start out and maybe they scale so quickly that they have a tough time catching up? What are some of the red flags
Is that
that
what you
saw?
think happened at Quadriga?
I'm just
They
thinking that
scaled
might
so
that
quickly they
might
had a
have
hard
been
time catching up?
for a lot of companies that started, let's just say in early 2017, they may have scaled fairly quickly. But in Quadriga's case, where do you think they went wrong, or what are some of the things that maybe some of the crypto companies in here could take away from that?
I'm not going to comment on what I think went wrong. I think everybody can sort of take their own story away from that. But what I can tell you is that when I joined CoinSquare, and prior to sort of, you know, when I was going through the interview process and like, oh, this is a crypto company and all that bad sort of reputation behind it is what you hear about in the news. I knew that my CEO and my founder were very strong proponents of, we want to do this the right way. We know we might leave some money on the table in the short term because we want to be here for the long term. And I think looking at a founder's and their supporters, their investors, their senior executive, if those people are all, like, we're well past Quadriga days now. I think 5 years ago, 4 years ago, even 3 years ago, you could probably still do this, but like, we're well past that. Everybody should be aware in some way, shape, or form that something is coming, and at a minimum figure out, does this apply to me? Gone are the days of doing this that way, if you want to be that legitimate scene provider.
I think that's great advice. Amber, you want to?
I will comment on that. I mean, part of it is if you're running a crypto company, look at your investors. Don't co-found or let someone invest in your company who is a convicted fraudster and money launderer. By which I mean Mike Patron / Omar Denani. That is a criminal. That is a criminal who currently lists on his LinkedIn that he runs an investment company that is investing in Canadian blockchain companies. Do not take investments from this person. If you have done so, see your lawyer. See your lawyer sooner than later and figure out how to disentangle yourself from that bloody mess.
Anna?
I'm not going to speak to that directly, but I just wanted to kind of pick up on some of what we've been talking about. We focus a lot on the operational side, but there really is a big cultural component to compliance. And everyone, you know, when they come in, they say, compliance is so important, it's the number one thing. Like, everyone can say that. It's very easy to say those words. But at the end of the day, you need a company where, you know, when someone from the board wants to jam a transaction through, or the CEO is saying, we're not going to make our numbers unless you let that transaction go through, that the compliance officer has both, you know, the leeway and the personality to say, I'm not letting that through. And at the end of the day, that's where things get difficult, because it's really easy to have the paper that says the right things, but what are your true values, and are they really compliance-based?
Oh, I couldn't second that more. Honestly, it's like, if you ask anyone, do you want to launder money or support terrorism? Absolutely not. Do you want to take this giant Bitcoin deposit from this great guy that I know, I swear he's a good guy, and he won't answer any questions, and like, that's where the rubber hits the road.
Do you remember when Ripple got fined like $1 million because Roger Ver pulled that trick?
Yeah.
Do you know who I am? Process this transaction, no
Yeah.
KYC.
Listen, no, like, I'm not going to try to pretend that it's any, you know, it's not any easier working in a Bitcoin exchange. I was the CCO of a Chinese bank. I was the CCO of a British bank, both of whom have had their very public problems. That same thing happened to me there, where like, you're being too much of a hard ass, like, you don't understand business. You know, this is how business happens with the big boys, and you don't know how to play with that. And like, you're just as compliance off. And I was like, No, I've been at this for 20 years. Don't belittle my experience. I
I
know a red
literally got
flag.
an MBA to shut my business people up when I was a banker.
Yeah, and like they
Just to
think
prove a
because you're
point.
compliance, you don't know any better. So like, you know, at CoinSquare, and like, you know, I did believe in what they told me at the time, and they showed me by supporting it, by giving me the staff, by giving me the people. Now listen, no one's ever going to give you a full budget that you request, but I can tell you I've gotten more there than I have at every other bank that I've ever worked at in terms of, okay, you need it, this is what we'll give you.
But Anna's right and Charlene's right. It's the culture, right? At the end of the day, if it doesn't start from the top. I don't even bother dealing with those clients. Like, I mean, the two that I have right now that I'm at Camelo and CCO, it started from the top, and management's the one that supports it, continues to support it. Anytime I point out something and I'm not comfortable with that, they're like, okay, well, why not? And I explain it to them. Do you want to be a part of a predicated offense? Do you want to be part of a money laundering activity? No. Then why are you dealing with them?
I love the way one word can get everyone going. Like, I just love dropping in Cadrigo whenever I can. From a macro standpoint, who benefits from these changes, and is there any companies that might have to actually change their business model because this is the final draft and these changes are coming into force? And that's to any one of you that want to jump in onto that.
I think for BTMs, that's probably where I see it being the biggest challenge initially, simply because there is that $1,000 threshold, and identification at machine, I think, is going to be really interesting. There's some fantastic measures that are available at most Bitcoin machines that don't necessarily meet the Canadian identification thresholds because they're very prescriptive. So I think aligning those things over the next year is going to be interesting.
Anybody else?
I think one of the biggest challenges is when you're sending or receiving the crypto. Using chain analysis, we can see most of the exchanges that have been identified, but some of them you can't see, and you're sort of scratching your head. Like, is this something that's in the dark web? Is this something that is hidden? Is it something that's in Korea or Iran or somewhere there's a sanctioned country? So that challenge I still haven't figured out how to totally solve. We're getting there, but I don't think anybody's solved it yet. And I think that's especially when you got to deal with the large virtual currency transactions coming in 2021. How do you know you haven't sent it to a sanctioned country?
And it's funny, like actually working with chain analysis, if someone creates a new deposit address to receive funds, it doesn't register right away unless the transaction's sent. So you won't know it's going to Bitfury until they've actually received the funds. So you wouldn't know in advance to be able to contact them to get the ID. I know there are solutions in place. Let's talk a little bit about those solutions. I know CipherTrace and Shift is trying to come up with an identity solution to meet these travel rules. For someone that's heard of it, anyone on the panel, do you think this is going to be enough for FinTrack or even FATF for that matter to be able to handle the travel rule and keep in line with the travel rule?
This is my biggest bone to pick. I went to the United Nations meeting in Vienna. Yes, I'm going to drop that at every conference I speak at. I was at the United Nations. Great. And
maybe we should explain what the travel rule is first.
Yeah. So basically, this is my biggest problem with the new regulations, and I get why they want to do this, but like the operationalization of it is mind-boggling to me at this point. So they're trying to treat a crypto transfer like a wire transfer. Forever, there has been a rule, mostly enforced post 9/11, on wire transfers that information must travel with. The name, address, and account number of the sender and the receiver have to be part of the chain, and it cannot be dropped anyway as it flows across the world. If a wire goes from Canada through the US, over to Poland, wherever it goes, that info has to go with it, and banks have had to return it if it doesn't meet the requirements. It's been a long time of implementation for that. SWIFT network transactions was, all this stuff was built. So I think of crypto more like cash. It goes into your wallet, and that's your wallet, and once it goes into your wallet, it belongs to you, and it's like taking money out of an ATM, you put it in your wallet. So this whole forcing of we need the name, address, and wallet address, physical address and wallet address of a crypto wallet sender and receiver, there is no solution for that right now. That is not how the blockchain works or is intended to work. At the UN meeting, they had I won't say who it was, somebody working for the U.S. government and suggesting a protocol for meeting this. There's several vendors coming out with proposed solutions. I'm actually with them all week this week, hearing the proposals to see how it's intended to work, but it's predicated on the idea that every virtual currency provider will buy this product around the entire world so that we can all have this API integration of information sharing. And that is simply never going to happen. And in my opinion, and I know I've been misquoted in the Globe, surprise, surprise, is that this is the outcome that I fear is happening as a result of this, is that it was short-sighted, both of the FATF and Canadian law for putting it in place, is that works for people like CoinSquare. We're a big exchange. It's Coinbase. All the BitFinex, the rest of them is like, you are a virtual currency provider. They can force this on you. But like you said, go create a new wallet. That wallet is not it's not going to be part of any solution system. People will go back to peer-to-peer trading, mixing underground, not on VASPs, but off VASP transactions where there is going to be no enforcement, no monitoring, no oversight. So of course, from a business model perspective, that's threatening to crypto exchanges. I know that CoinSquare and virtual currency providers like us are a bit of the antithesis to crypto to some people. Like, we've centralized a decentralized thing. I get that. I don't care. There's room for everybody, right? But if you're really worried about, there's all the terrorists on the blockchain, that threat is not real. It hasn't panned out. It's political. There's a whole bunch of things about that. I can talk about it over drinks later, but...
I want to interrupt you there. Why every time the government is looking to stifle something or really put in regulation, they always put terrorist financing in front of money laundering? In any other case, it's always money laundering and terrorist financing. They want to stop blockchain transactions. Now it's terrorist financing in front of money laundering. Are they using a scare tactic, Amber, in your opinion?
Yeah. I think that's true in 99% of cases where we talk about things like that. Like anything around me, couches have been sat on by terrorists. Terrorists have used MacBooks. Terrorists drink water. Any of these things could happen, but when I say that, you know how absurd it is. When we talk about terrorist financing, when we talk about money laundering, the most common vehicle for those things are banks and US dollars. And we don't talk about that, right? We talk about other things because it's a sexier story, it's a scarier story. When we talk about banks and US dollars, we're all like, yeah, but I've used that. I've done that. That's not really scary to me. I use a bank every day. It's kind of as absurd as saying, well, someone got stabbed with a steak knife once, so we should all only have butter knives from now on. You're at that level of absurdity. But because you're not talking about things that have the same type of mass adoption, the absurdity isn't necessarily as apparent.
And I want to go to you, and I know this may be tough for you to answer. You may not even want to answer the question. As Charlene put out, there may be a U.S. push for this, and mainly because U.S. economic sanctions are so prevalent these days. Not a lot of countries are even agreeing with some of their sanctions. And wrapping up the whole virtual currency thing could be their only way to really keep it in one place. I think if it goes down to peer-to-peer exchanges, they're okay with that. They can just focus on peer-to-peer mixing services. What is your thought? Is this more of a political push than anti-money laundering push?
On the travel rules specifically? Yeah, I think in part it's the challenge of a new technology, right? The travel rules existed in other contexts, and I think it takes, understanding what the implications of the new technology are and trying to see, they're trying to match and what they would see argue as leveling the playing field. And I think it is difficult, and I think there are challenges in the cryptocurrency industry where there are little players that pop up and nefarious transactions that happen. So I think the goal is laudable, but I think the technology is making it challenging, and frankly, I don't think there is a solution yet, and that's why we're kind of in that quandary. And I think it's one of those aspects that I think still at the very start of the discussion on the travel rule. Like, it's been put forward. Obviously, the industry has pushed back quite a bit and expressed the reasons why it's going to be a challenge. I think it will continue to be a challenge, but that it may be that over time, both policy and technology evolve such that we do find something that gives some comfort that there is better traceability of transactions.
Charlene, I want to move off to the travel rule just for a second. There's no easy segue out of it, so I'll just jump into another topic. There's been some changes in regards to beneficial ownership, where they're saying reasonable measures to confirm the accuracy of beneficial ownership. What do you feel about this situation, considering Canada's been known to be very lax when it comes in this department?
I mean, I think it's always been a reasonable attempt type of thing. Like, we've known forever there is no way to confirm the accuracy that is requested in law. In 20 years in banking and consulting, the only thing that anyone has ever truly relied on is an attestation. I know that regulators don't like and don't accept attestations, but how can you ask me to confirm the accuracy of something against something that doesn't exist? So, you know, I sit with the Transparency International Advisory Committee on the beneficial ownership public registry project. I don't know if I'm going to see that in my lifetime. I wonder if I'll be dead before anything changes there. You know,
There are changes coming to both the corporate registries and through tax
Yeah.
legislation, but at least.
But it's still
You're more
internal,
hopeful,
right?
you're- yeah.
We can't use it.
Yeah.
We can't get to it,
the debate
right?
right now is that the recommendation has been a public registry. The word so far is that public is not in their interest. So how does that help me do my job any better? And how does that help me pass an audit when FinTrack comes in and writes us up for not having confirmed the accuracy of what we're told? There's a whole other arm of government accountable for maintenance of corporate registrations that don't even include a requirement to report this, maintain it, and keep it up to date and have anyone checking on it. So I've struggled with that my entire career. I don't have a lot of faith that it's going to change it before I retire even. There's a lot of strong lobbyist groups and reasons for why people wouldn't want that public. Some of them I agree with. Like, you know, it's like, would you want certain things about your life public that, you know, maybe are in place for different reasons? But the point is that criminals have been exploiting loopholes like this forever. I can only say we'll see what happens, and I'm going to continue to do what I've done for the last 20 years, which is get that attestation and put it in my file.
Yeah, and it's funny because some of the provinces are actually doing a better job than the government. Like, I mean, the list of shareholders, directors, percentages, it's beautiful.
If you're provincially
if you're provincially registered with certain provinces, right? So there are some that are out there. If we could get that at the federal level, it'd be amazing.
We'll keep trying.
Yeah, I guess.
Overall, and we'll
So-
just finish up with our questions, and then we'll go to the audience, because I'm sure they have a ton of questions. Do we believe that these changes are actually going to help mitigate some of the risks and some of the money laundering that's taking place in Canada, or is this just adding more of a burden to FinTrack in regards to the information that we're receiving, or is it a little bit of both?
I'll start, I guess. I think it's warranted. We need it. There are activities that are there that if we're not monitoring or we're not looking for them, how do we know about them, right? So I've already seen things that are equivalent to the money service business in the virtual currency industry, and it happens. Wherever there's money, it's going to flow. So wherever there's money, there needs to be some sort of oversight. Now, whether the way we've done it in Canada is the best or not, it's debatable. Like, I mean, there are other jurisdictions that do a much better job, and then there are the other jurisdictions that do a crazy-ass job, like the U.S. I don't think I'd ever want to be in, where you have to register in federal and then every state that you want to deal with. But there's got to be a balance somewhere. So I think they're good for the industry. I think it legitimizes the industry even more. And it helps combat a lot of this stuff that is happening with other industries that are similar to virtual currencies.
Amber, same question. I'm going to switch it up a little bit. Everyone's talking about crypto. They need an institutional investment. Do these regulations help with that investment of institution that everyone's praying for or waiting for until we go to the moon?
Probably. So can I embarrass you guys? Is that okay? Yeah, I'm going to. So in the room today, we actually have Evan Thomas and Laurie Stein, who are amazing. They're from Osler. And they've been working on the 3IQ case, which I think is super cool. And just as a plebe who wants to be able to put some of my Bitcoin maybe into an RSP, that's a huge deal. And I think it's an incredibly, it's going to be amazing to be able to do that. They fought well and hard on that one, and I hope that they prevail. So yeah, I think that having rules around that, having regulators be comfortable with it, that's very helpful. I know that in every big event that I go to, there's always folks from the big investment firms there now. They're very quiet about what they're doing and when they're planning on launching things. But I think that we're going to see those things come into play sooner rather than later.
Charlene, for
I hope
you,
so anyway.
For you, what's it been like dealing with the regulators? If you've had to discuss, or just, I'm sure you've had discussions with them, registering as an MSB. Can you talk to these crypto companies about what to expect or what your experience has been personally, and maybe with your 20 years experience, how it differed from traditional banking?
Well, I'll start with that it's really easy to be cynical, and I'm known to be quite cynical. I'm trying not to be. It's a lot of work. You know, I come from a background of working for regulators. I worked in the US, I worked with US regulators. Being a consultant, you work with regulators. Being CCO of 3 banks, I've worked with OSFI, FinTrack, OSC, like all the securities. Like I've worked with them all throughout. I think that's been incredibly helpful in moving into crypto, is that at least I have some recognition in Canada, at least mostly. They're familiar with me and my work. So that's gained me a little bit of trust that might be harder to get if you don't have that. Again, I hope that what we've done is pave the way a little bit to educate them and train them. And it's the reason I go to these events and I do so much speaking, is I want to be transparent and out there to know that, like, you know, everybody's trying to sort of do their best, and like not everybody's out to get one over on the regulators. And I think that it's, again, we're at the beginning of this, and it's going to take time, and there had to be some, you know, incidents like Quadriga maybe to get them to speed up paying attention. I feel like people like us and others like us in the industry that are having the relationships, building the relationships, we have to start somewhere. And again, with that spirit of the legislation, while some of these operational things might not be fully figured out yet, we got to do something, because there's no way any government of most countries is going to allow something like this to go completely unchecked and unmonitored indefinitely.
And for you and your practice now, how did these regulations change what you do, or maybe where you focus your resources as a legal practice?
Yeah, I mean, we're still kind of dealing with the administrative monetary penalty change, which is really the fact that, you know, FinTrack wasn't really giving out penalties for quite some time. So we're kind of seeing a general focus now of not just in crypto, but just generally understanding how important AML is, and the fact that there are some real sanctions that come with not complying. And I think Canada right now is coming out of some bad times from an AML reputation perspective, obviously on the casino side in BC, but as well, you know, these changes really come out of the FATF examination from 2016, I think, 2017 maybe, where they looked at Canada and found deficiencies. So I think, you know, kind of coming back, I deal with it more when FinTrack shows up, tends to be when we get, or the RCMP or whoever shows up. And definitely I've seen kind of a big acceleration of those calls in the last 3 months or so. And I think we're going to continue to see those, and particularly, you know, once 2020 hits, I think they've got probably the speed dial set, and it'll just hit, you know, dial on that day and show up. So looking forward to seeing people then.
You're going to be manning the bat. You're going to be manning the bat phone at that stage. All right, I think we can go to audience questions. Feel free to jump in, ask your own questions. The panel's been amazing so far, and it's a good opportunity to quiz them on some of the things that might be on your mind.
Hi. I'm just going to play a bit of devil's advocate here. And question here is FinTrack capable of monitoring virtual currency exchanges, or should the government create, for example, a special license like we see in some countries, or should OSFI look after it? Is there a case for FinTrack to essentially regulate these entities?
I mean, capable might not be the word that I would use. I mean, That's not what I mean. I just mean, you know, if you're asking about their skill set and ability or their volume of people dedicated, I've asked this question myself. As you add more entities, not only here, but anybody who sells here globally, I would like to, if you're going to do this, then do it well and put the resources towards it. I worked at FinTrack when it very first opened. And I know that when I got there, I'd never worked in money laundering before, but I was a junior analyst. I sat at my desk and I was like, so how do we do this, guys? And, you know, they had to build from there. And I think there's a similar building process they're going to have to regulate this. And I will say, I'll give them the credit of, you know, the consultations, despite the little movements in the law, a lot more now than there was back in the day, that's for sure. And I will be working with FinTrack on the guidance that they'll be writing for these regulations. They'll be reaching out to more industry players to ensure that they're not, you know, interpreting something. So in the same way that we have to learn how to play with the regulators, they have to learn how this business works in order to regulate it. And I feel like it's better if we do that together than fighting them and then them coming up with something that doesn't work or doesn't make sense. And no, I wouldn't advocate for OSFI to monitor this. You don't want that. And I wouldn't advocate for another license type, because then you're just asking for a whole other set of things. This is a start, not the finish.
I would just add, from a resourcing perspective, there's a process right now where the Bank of Canada is having to build a new regulator to deal with the new National Retail Payments Framework. So I think really, you know, it's much, from a resource perspective, it's much easier to build on top of an existing regulator that has a mandate where they've looked at very similar things and has been, you know, making efforts to do outreach to the industry and get educated in these areas. You know, they've had a number of industry outreaches about things like regulatory sandboxes and digital identity. And so they are trying, and it's challenging. But there's also more resources that were allocated in the last budget to FinTrack as well. So I think definitely that's the right entity for it. It's just, you know, it's a learning curve for both the regulated entities and the regulators.
Hi, Charlene, I don't want to pick on you specifically because I've heard you talk a lot. I know how intelligent you are. But globally, you've seen a lot of these exchanges have an inherent conflict of interest across their finance supply chain. We'll use Tether as an example, issuing their own stable coin and then going and buying Bitcoins with it. And maybe we'll use CoinSquare as an example because you are issuing your own stable coin. You have different services that are being offered, and and also to your point around money service businesses being, you know, not the top regulated type of entity in the world. So as you expand your services, and as these centralized exchanges expand their services and become more and more like financial institutions, what are you guys doing to prevent that, and what do you see the world similar organizations doing to deal with those problems?
I mean, it's hard to speak for other organizations because I think different organizations take different stances on this. Our stance has always been to play with the regulators well. The MSB world does not cover stable coin and things that you address in the way that regulators would like to see it addressed. And this is where we start talking about the difference between an MSB and a securities regulated entity. So I'm pretty sure that Cole has been public, and our announcements have gone out about our stablecoin offering and our relationship with the StellarX network, and that requires new regulators and new regulatory regimes and 800 more pages of policies and procedures for things like you know, security of assets and separation of one side of business from another. So rather than going off half-cocked and doing something and hope they like it, we work with them and determine the expectations together while educating them along the way and saying, you know, instead of trying to fit this square peg into a round hole, of what you're accustomed to, we take the best practices, just like we did with MSBs, the best practices of what we're accustomed to with that crypto angle of this is why this isn't going to work, but here's what we propose again to meet that spirit of the legislation. So, you know, it's not a short process, that's for sure. I don't know if we released any time commitments in our press release because we have these unknowns that we have to figure out, and we don't want to fall in the trap of doing something and then finding out later that it pissed somebody off, and we're going to have to backtrack and start again. So we'll be slow and steady wins the race. We hope. We know. Hope that answers it.
Yeah,
somewhat.
I think it certainly does, and that's helpful. And I guess the follow-up to that would be, you know, we do see these problems across exchanges globally. And I know CoinSquare and you and Cole, you're very highly regarded professional organizations that do follow the letter of the law. But without these regulations in place on day one, how can we continue to trust these organizations? And we'll go into like
I know,
Facebook
it's definitely
and Libra
hard.
and
Yeah.
that kind of thing. It's very concerning.
Yeah, I mean, I agree. Those things tend to help us move forward. You know, just because we're Canada, we're seeing what's happening around the world, and we are able to learn from some of the lessons of those that went before us. And you know, again, I guess we hope to have that same trail for those that come after us. We also hope to be a bit standard setting, and you know that what we're doing is going to be the regulator standard because we've spent the time working with the regulator on it. It's not an all yes we'll do whatever you say relationship. It's a lot of back and forth and education and what's going to work and what's not going to work. But we want to propel them forward. It took too long for them to get there. I know they're under pressure to move more quickly with their sandboxing and their other things that they're working on, because things like Quadriga happened because everybody took their time. I think we're well past those days now. Somebody else.
So for crypto exchange, that we basically handle Canadian entrepreneurs to getting access to foreign crypto capital markets. We borrow money from those markets and give them to Canadian entrepreneurs. So how your regulation rule going to apply to us?
I think the very nuanced answer to that one is it depends. And I would say it's definitely in that situation worth sitting down with someone and doing a mapping of here's how money is coming in, here's where it's going, here's how it's going to. Because it's a very nuanced question for any one particular business model. And remember those FINTRAC policy interpretations as well. So if the answer is, we're not sure, this is really novel, we haven't seen anything like this before, then it's possible for you or for your lawyer or for someone else that you're working with to write to the regulator and say, here's the fact pattern. Are we covered or are we not covered?
But this sounds like an investment type of activity, so it would also be the securities regulator, and right? No.
We don't take Canadian investors. So the investors in the community, they basically in other countries.
Yeah.
We raise the money
Yeah.
from those markets and we invest them. So we give the money to the Canadian entrepreneurs.
That's an investment, though.
Yeah.
So
So
that
in
could be
those
an exact
countries-
market dealer activity. That could be a broker.
We don't invest.
Yeah, but
They borrow money from-
you're taking money from investors in other countries, those countries have their own regulatory
Yes.
regimes for what is an investment. And if the Howey test that everybody talks about, just to keep it short on my part, because I know I talk a lot, is that don't wait for someone else to tell you what you are. Write it down, get advice, contact regulators and ask them, be prepared for the answer and maybe an answer you might not like.
Yeah, and document. So every step of the way,
Don't just
every
have a
time you
phone
get an
call.
opinion, whether it be from a lawyer, from a regulator, from whoever, document it. Yeah, not just this conversation.
You can't validate what a regulator told you, especially if it was 2 years ago and things have changed.
If something happen, say we have some transaction, if we have some transaction happen before year 2021, before your bills come into act, but are you going to retrieve all the deals during these 2 years?
So you're talking two things, right? One's a securities matter, and one's an MSB matter. Yeah, MSB matter, from my understanding, is they're not going to touch anything related to a virtual currency if it's just doing virtual currency activities until after the regulations come into
I would
play.
be less worried about the Canadian regime and more worried about the regimes that you're taking money from people from, because if you do take money and say an investment goes badly and people get angry, I gave you $3 million and you sold me a promise. The securities regulators are tending to focus on that safety, security, and soundness of, you know, investment in something that is, you know, expected to get a profit later, and that those regions and people harmed in those regions or potentially harmed in those regions tend to be a
Yeah,
concern of theirs over money laundering, like forgetting money laundering for a
Kick is a
minute.
perfect example, right? It's
Yeah.
the U.S. regulator coming into Canada, right? So you can expect any regulator to come into any country if they feel that the safety, securityness, and soundness is broken in their country.
Thank you.
We've obviously seen a lot better or a lot more interaction with the regulators throughout this process. There's been a lot of consultations, there's been a lot of feedback, and it's been really good. In your opinions, does this still feel like trying to put a square peg in a round hole?
Sometimes it does. Sometimes, you know, there's a good fit, sometimes there isn't. But I think that the consultations have become a lot more, not just frequent, but meaningful. And so the depth of those conversations, the understanding of the way that crypto works that I've seen from various regulators is sometimes a really pleasant surprise. We've come a long way.
I have a question and we saw one time. So Amber, we spoke on the phone before. Thanks so much for your advice. I'm from Lake Finance. So we are basically building kind of like a next generation robo-advisor for crypto. But the way that our MVP of a product works right now is it would just basically, it's non-custodial and it plugs into an existing user's account. So let's say like they're on CoinSquare. We would basically just take their API keys and we trade on their behalf. So if we maintain this kind of functionality and where we don't take fiat, and in instances of just offering a product that only trades utility tokens as well as one that offers securities tokens as well, does that also have implications in terms of requiring MSB registration and all that?
So there's a few things that you mentioned there, and obviously, and I think, you know, kind of stepping back, again, the devil's in the details, and here we're kind of talking about a very broad business model that if you tweak certain things certain ways will have a very dramatic impact on the decision. And you've also mentioned, you know, utility tokens versus security tokens. That's not legal terminology. That's terminology used colloquially, but there's still a tremendous amount of uncertainty from the regulator's perspective as to what really, you know, or I wouldn't say necessarily that there's uncertainty, but it's more that there's a very conservative view. If you want certainty, everything is a security. All this kind of stepping back that, you know, you have a bigger issue on your hand and whether or not it's an MSB. It may or may not be an MSB, but it may also trigger a number of securities law requirements. So I think you have to really, as Amber said, sit down and, you know, walk through with your advisors very carefully the precise steps and then structure it according to that. I don't think any of us here, based on the very limited information that you've given, are able to say one way or another.
Yeah, I would echo that, and I would say that definitely needs a really good, strong securities person to advise on it as well.
This is where I would say write down like your MVP, what your
Yeah.
next plan is, and then like the permutations of who owns the keys and who's doing the what, and then get that expert to opine on what may or may not apply.
Yeah, and I mean, I would say as well, as you go through that process, whenever you're deciding that you're going to bring a particular token into your ecosystem, you have to do a whole assessment around that in terms of what is this? So, you know, is this a virtual currency? Is this a security? Is this something else? And then have really good due diligence to back it up, especially if the answer is that you're saying it's not a security and it's not a virtual currency. I think that I've seen very few cases where a regulator would take a view that something falls into that something else category.
Document,
And
document,
can we
document.
pause here for a minute? Did you want to comment on that, Lori? Can I hand you a microphone? Ladies and gentlemen, the fabulous Lori Stein.
I'm the securities regulatory lawyer. And in that gray area that Amber's talking about, where it's possible that something isn't a security, but it's not yet a virtual currency, and maybe it won't be. Maybe we call it a utility token. We're trying to create this safe space, but there are also derivatives and commodity futures and any sort of contractual rights or obligations flowing from an underlying asset and promises. If it's not an investment contract under the Howey test, from what I've seen and the way that the regulators are looking at those things, whenever the different rights associated with an instrument are separated, it's likely going to be a derivative if it's nothing else. And in Ontario, and unfortunately in Canada, our derivatives regulatory regime is still very fragmented. While securities, everybody's kind of in the same playing field. Province to province, whether or not there's a requirement to register if you're advising in derivatives is variable. But in Ontario, there is one. And from what you're describing, you know, absent details about the specific tokens that you are considering including in your model, I think that you have to consider those risks as well.
Thank you.
Thanks, Lori.
I just want to circle back to the travel rule. I know it's in place today in the U.S., and forgive my ignorance here, but is that something that's going to be enforced in Canada in the next implementation, or is that something that we just expect to have for Canada to adopt sometime in the near future?
No, it's in the law right now. The
Okay.
timeline of when it will become
Yep.
enforceable is, I think that one's the 2020. 2021. I haven't lined up all the numbers yet with what is on what date or what not, but like right now, like we've started looking into how we're going to solve this 6 months ago as we were going through the consultations. And I've not seen anything yet that I'm fully confident in that doesn't require the entire earth to use one software. So I can't even, my brain can't even wrap around how this is going to happen. I'm not the blockchain developer. I can't even claim to, after a year and a half, to know enough about it to know how the hell we're going to do this.
But the rule is one of this rule is something already with MSBs, with banks, with everything else. So
For wire transfers,
wires,
right?
right?
Which already has that
right.
ecosystem
So
built.
so they're just applying that same rule to the crypto now. That's all.
How do you guys envision cryptocurrency exchanges to continue to operate after this comes into effect in 2020?
Terribly.
Yeah.
So I mean, the 2020 piece is just like, by 2020, you have to do what MSBs are already doing today.
They figured it out.
So
But
I
they
don't
haven't
actually
said
think
that
that's
to the virtual yet. It's just for the wires, right?
No, it's in the virtual.
Is it in the virtuals?
It's
I can't
absolutely
remember.
in the virtual, yeah.
Okay.
Yeah, so I think there
Yeah.
are some bigger questions down the line, and I don't think anyone here knows the answer to that. So I don't think those things, you know, whatever those rails look like for the transfer of that information, they're not built, they're not agreed upon, they're not something that we understand yet.
Yeah, I mean, there's talk of the, you know, an SRO being created amongst all the VASPs to agree to like a governance model. There's, of course, there's tech providers. We got the solution. Everybody just has to buy our product and you can all work, but only those people who have that product can speak to each other. And if this country buys this product and it's not interoperable with the country that buys this product, it's just like, this is where I am, you know, 8 months later, and sitting on these calls for 2 hours with vendors asking these questions. But like, you know, we're not the biggest platform in the world, so we look to the bigger ones in the world and where they're going and consult with them to see what's available and then try to come to some consensus.
Question behind you.
Jean-Marc.
Oh, sorry.
Then do you think there's an advantage with privacy tokens? And to preface this question, someone was arguing to me that in fact, with privacy tokens, you can actually confirm microtransactions, and that would then confirm that you are the owner of that address. Just like when PayPal sends you like 11 cents to confirm how much money was sent to your bank account, do you think that would be at least one solution, considering that on the...
Yeah, so the thing about the travel rule is that when it comes to prove, it's not really about your wallet address. It's really about the wallet addresses that belong to the exchanges, right? To the dealers in virtual currency. And so it's more about if, crypto is going from CoinSquare to BitFinex, what does that look like? And what information are they giving each other? And the idea there is that, let's say it's sent from CoinSquare to BitFinex. CoinSquare verifies their user on their end, and BitFinex verifies their user on their end. And there is that expectation. So normal KYC is happening on both ends of that. It's just that there's an expectation that there's some sharing going on that isn't happening now.
But the challenge comes in is when somebody puts money onto our platform from their Nano or from their own private wallet. Like, there is no other VASP on the other side of that. And, we could play stupid and say, like, oh, it must be your wallet because of the way tokens and keys work. And, like, I don't know, you'd give your
And I
wallet
don't
to
even know-
somebody else. I can't imagine why anybody would do that, but it's been known to happen.
And you get your own, I don't know about you, but every time I do something, it's a new address.
Yep, you get a new wallet.
Right, so
And
it's
if
a
you
new
sanction
wallet.
a wallet and put it on a blacklist, you get a new wallet. So I think they're trying to mitigate some of that, but I'm still trying to wrap my head around it myself.
Next question.
Yeah, I think there's a lot of issues like the travel rule that could potentially drive consumer users to markets outside of the regulated scope. I'm wondering if regulators or governments have a plan or what they're going to do to stop or prevent users from using services or decentralized protocols that the regulators are trying to prevent.
Oh, well,
from.
they're trying to include DEXs in these requirements in different countries around the world. I mean, the FATF recommendations, people are like, oh, they're just recommendations. No, they're a little bit more than that, because every FATF member country, as party of their UN agreement, must enact into law. Now, it's never 100% consistent across every UN nation. That's why we have differences between Canada, the US, and the rest of the world. But, like, over time, they all have to adopt them and in different time scales. So sure, you can play what do they call it, regulatory arbitrage or regulatory whack-a-mole, like down in Canada, but up in Brunei. Sure, for a bit until, the whack-a-mole keeps going.
I guess the challenge also becomes with that is how did you get the money in there in the first place, right? If it's crypto to crypto, that's different. But if you're taking fiat to crypto, it has to come in somewhere. And I don't know how you do that without going through a regulated entity or using cash or something else.
We are seeing law enforcement go after some mixers and shutting them down, but as Charlene said, we're still playing a game of whack-a-moles. One will just open up right away, but
Yeah, and I hope in a sense that we don't see a lot of regulatory action in terms of the peer-to-peer transactions, in the same way that I think that we shouldn't see some of the regulatory actions that we see that are intended to stop people from having strong encryption. Yes, strong encryption sometimes protects criminals, but it also protects literally all of us in this room. So for the most part, I do think that they're taking the right regulatory tack in terms of regulating businesses rather than really focusing on those individual transactions.
and we're going to end it right here. I just want to take the time to thank David and the Outlier team and Amber for putting this amazing event together. It takes a lot of time and effort to do so. And I'm assuming the volunteer, I don't know if you're paying them or not, but the volunteers are the
And a
people
huge thanks to Block Geeks.
for doing all the video setup. This is really amazing. And just before we go, we want to thank the panelists, and just from an understanding from my standpoint of just getting into the industry a few years ago, to see how open and helpful all of these guys were in guidance and personally getting on the phones. I know a lot of people getting into the AML, much less blockchain and cryptocurrency compliance, will vouch for this about how many of these individuals on the panel will pick up the phone and talk to you and explain how to get into the industry and how to do well. So if you want to pick their brain, not just about cryptocurrency, because all of them have really strong AML backgrounds, this is a perfect opportunity, these networking events. And to you, the audience, these are why these events are so special and happen so often, is because of your participation. So I just want to take the time to thank everyone.